Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I would like to remind you all that losses can and will and do happen, and I want to focus today's today's video on a losing trade that's just unfolded in the DAX. But first, let's have a look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades were taken, they're shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. This is what I'll be looking at in today's video. All professional traders know, understand, and more importantly accept that losses can and will and do unfold. All trade decisions are your own sole responsibility. Right, let's have a look at this VS or volume spike setup that's just unfolded on the DAX. If I place the analysis on, right mouse click over the red cell bar, you can see that this was taken into a short trade. It didn't reach its target and would have actually been stopped out for a losing trade. So this is important to understand that losses can and will and do happen. Let's place some additional analysis on to see whether this was indeed a good looking setup. We go out to the higher time frame chart. Remember, the higher time frame is between 3 and 5 time frames higher, so if you're trading a 3-minute chart it would be the 15-minute as we have here. If you're say trading 15-minute forex it would be the hourly chart, or if you're trading daily it would be the weekly chart. Now there was a pivot high back here, so you right mouse click, do decision point, and that gave you an area of resistance that would have been on your chart in advance. So as the DAX was rallying up here this morning, this would have been a resistance area. So if we go down to the 3-minute chart, you can see the market was rallying up. There would have been a sell set up here. This was against an blue MTP trend and not and hadn't reached the 15-minute DP resistance, so this one would have been avoided. But this VS sell at the time looked to be a very good trade setup. So let's go back and have a look at it at the time. It's important to look at these at the time without the benefit of hindsight. Remember, a VS setup is where we have a bar like this one that goes through a previous important psychological high. This bar not only went through that high but also this high back here as well. So at the time this looked like a good sell setup where we had a high volume spike as the market went through, went into our resistance area where the market backed off and made a red sell bar. So at the time this looked like it to be a very good setup with resistance at the higher time frame chart. So let's place the analysis on, and that gave you the trade setup. Remember, use correct position sizing to keep your initial risk small and under control, in this case less than 2% of a sample $20,000 account. Remember, in the background we vary our tick size to keep your account or your risk in your account currency. In this case, even though you're trading the DAX, your risk is in US dollars. If we turn trading mode off, you can see the market did sort of go down. It sort of went down a bit, wobbled around, didn't really go anywhere for a while, and then started to retrace back up, and then would have actually stopped you out for a losing trade. It's important that people who sell software and trading gurus show losing trades, because it's important to understand that losses can and will and do happen with any system. The trick with MTPredictor is, because we use correct position sizing, is when the losses come through, and they will and they do, as in this example, the risk is kept small. In other words, one risk unit. So in other words, we vary the number of lots, contracts or shares to keep the initial risk small under control. So here this would have been a 1R or 1 risk unit loss. If I go back and have a look at the E-minis yesterday, you can see here we had a nice TS3 buy setup here on a blue MTP trend. The market went up to its first target where the profit would have been 3 times the initial risk. There was a sell set up here on a neutral trend, so there was no reason to want to stop and reverse at that particular point in time. You'd have carried on with your existing long trade into the high here. But this is why I wanted just to show this profit would have been 3R, in other words 3 risk units, whereas this loss would have only been 1 risk unit. There are also some other good trades on the E-minis a bit later as well there in the day as well. But this is a good example to show you that when losses can and do unfold, they're kept small, but when profits come through, the trick is keeping the profits larger than the losses, and that's what makes money over time. But it's important to understand that no matter how good your trade setup looks like at the time, losses can and will and do unfold. A PS for advanced users here is because this is a VS setup, and we anticipate that in a VS setup the professionals are coming in and then moving the market lower. In this case, the markets tend to move quickly in the anticipated direction. So as this one came down and was basically messing around and going sideways, particularly when you'd got into this area here and you'd gone past the 100% initial risk 1, 2, say 3 times, I'd have brought the stop to, or suggested bringing the stop to at least break even. So for the more experienced users among you, this may well have been a break even trade. But on the face of it, it would have been a 1 hour loss for the newer traders among you. So that's why I wanted to do the video today, just to show you that no matter how good the setup looks like at the time, losses can and will and do unfold. Over time, the trick is keeping the losses small and not avoiding them. So when you have profitable trades like we had yesterday on the ES here, the profits are larger than the losses, and that's what makes money over time. It's not avoiding the losing trades, it's keeping the losses small.